So, welcome to Behind the Checkout, a Gravy podcast. I'm John Lunn, the CEO and co-founder of Gr4vy. And today we have a special guest, Dwayne Gefferie, payment strategist. Okay, so today, really, this is one of our first ever podcasts at Gr4vy, and we're really interested in talking about what's going on. And like what we're trying to do with this podcast is ask the questions that everybody's asking, but is too scared to stick on a sort of a corporate press release and really talk about like what the hell is going on. And I think we'll take things that come out of this and we'll expand on them in later podcasts and bring in other experts and see where things go. But we're both payment geeks. We both, that's how I describe myself. I'm not sure that you describe yourself, but I love payments. I love talking about payments. And I learn new things every day about payments. So on that note, let's kick off. Start with big picture. How would you describe the state of payments around the world? Are we moving forward, or are we just adding complexity right now?
Absolutely. I think the current state of payments to me has never been more exciting, right? I think for those of us who have been in payments for quite a long time, I've been in payments for well over 2 decades, a little bit more than that. But I've also studied the history, right? And payments has been this slow burn into people accepting the way that basically changing the way that we're paying, right? We went from a cash society, cards were introduced, and then adoption went over time. And even now, still cash, I think it's probably the first year that cash is being sort of like overtaken by cards and digital wallets and all these other things across the world, actually. But besides that, besides the infrastructure that was there, we're now already, what is it, 50, probably 60 years into sort of like this card-based society that we've been working on. But that also means that a lot of the infrastructure, the underlying infrastructure, is so legacy. I've been doing this for 20 years, 2 decades. And what I'm seeing right now is that whole new wave of new technology, everything from cloud native technologies to just different APIs, everything, the embedification of payments, we can talk about that. All of those things are now creating so many different opportunities. We see ISVs and SaaS companies wanting to get a piece of that payments. We see legacy payments players now going around the world and saying, who do we need to acquire to get that little bit of technology that's going to keep us in the race and do some nice things. So I think for me as a strategist, as somebody who's enjoyed payments for so long, it's the best time to be in payments right now because there's so much happening. There's so much opportunity. There's so much innovation right now. And I think on every single part of it, you can be an analytics person. You're going to be great in payments. You can be a product person. You're going to build some awesome products. You want to sell it? Well, this is the biggest market out there because everybody's going online. Everybody's doing omni-channel. There's so many different directions, not even to mention the other things that are also encroaching into our space like crypto and AI and all those other things. So I'm excited about it.
So, with all of this, like, I'm also equally as excited. I saw a graph the other day showing like the evolution of payments, and I think when we went from shells to not very inflation proof, the old shells, but then we moved to sort of coins and notes and checks, where there hadn't really been any payment innovation for a long, long time since the invention of the check until really the card came, and since then it's just exponentially growing. I know we have the Moore's law with computers. I think we need our own law. Maybe we call it a Jeffrey law about how quickly payments is evolving, but it seems to get faster and faster every single year at the moment. And that's obviously when things change, it's provides a lot of uncertainty. It leads to the next question. This is causing headaches, right? This is like, if you're sitting here as a retailer and you're like, what the hell am I supposed to do? What headaches are merchants feeling at the moment when it comes to payments? So like when you talk to a lot of retailers, you've been in payments a long time, but is it fraud, tech debt? Is it just keeping up with consumer preference? What are the headaches?
Well, I think the consumer preferences are not really a headache. They're much more of an opportunity. At least that's how I see a lot of it being marketed, right? Because when you really look at merchants and what they're trying to do, they're always trying to do a couple of things, right? Hey, I want to make sure that every single customer that comes through my website or comes through my door is able to pay without, being as seamless as possible. And I think everything from the UX and the UI type of technologies that we've seen, conversion optimization, those things are all fine. And it's that dreaded payment that comes in. What's the auth rate? And I think that's where the challenges are, right? Like if you're in Europe, right, we have PSD2 or pretty soon PSD3 as well, where we've mandated things like 3DS, which create more friction within that process, meaning that people are saying, well, I don't have that on me, or I don't have my mobile phone, or I don't have that code, so I'll do it a little bit later. And it's also merchants who are then needing to implement that globally as well, where not everybody's adapted to it. So I would say probably regulatory divergence is really that thing, right? So PSD2, PSD3. I think in the US, you have like FedNow and Durban 2.0 that are probably going to introduce a lot of those things. So you just get different friction and all of that identity that comes in there. I think the second part that I think is really a big headache for a lot of merchants is just the rising impact of fraud, right? We've always dealt with chargebacks and disputes and all those other things, but come in AI, right? Generative AI, and all of a sudden these things become much more sophisticated, much more orchestrated across different platforms and channels, and finding those things. And also a lot of the scammers or the fraudsters are much more patient, because if they find something that they can exploit, they're going to try to exploit it to the maximum as well. So we're already seeing that. You see reports from not just Mastercard and Visa, but across the world. You see, I call it the $400 billion problem, where in the next decade, you're going to have massive losses when it comes to this the fraud associated with payments. And I think, yeah, you can try to do anything on our side on like sort of like using AI and machine learning type of technologies, but the fraudsters don't have to play by the games. The fraudsters don't have a board that they need to approve it with before they can go on. So most of the time they're ahead of the game, and that's going to really impact it. But then I think also the last part is really, and I think we've seen that probably in the last decade or so, where you see that technical debt, or the PSPs, the legacy players who they want things to happen now for them. Innovation is actually happening outside of the scope of payment. So what merchants are seeing is saying, hey, we want to move forward, but you're not moving as fast as the industry is moving forward, or as we want to move forward. So you see the likes of some companies who are really good at that technical development, and finding that they're doing extremely well, but it's the old legacy players who are not adapting to it. So now you have other players coming in and filling up those gaps. So I think those are just some of the challenges that merchants have to deal with, have to face with, and have to make decisions on.
Yeah. So like with these payment methods popping up left, right, and center, right? Like how the hell do you manage that as a merchant? I think like buy now, pay later. Like we've all got our favorite buy now, pay later provider, right? There's quite a few of them. As a merchant, do you need to support all of them? Do you need to support some of them? Like, you go to a new country, pick Indonesia. I think there's like 25 or so different alternate payment types that run there. Yeah. Do you need to implement every single one? Like, do you do you need to put it there just in case? And how the hell do you deal with your checkout? I mean, you're going to end up it looking like, a casino with like flashing lights here, there, and everywhere. How do you manage this? How do you make those decisions?
Well, I think for me, whenever I deal with enterprise merchants, or just scaling merchants that are going across the globe, and you're in that expansion, I always say, look, what are you trying to achieve? Of course, you want to go into a new market. You want to capture as much of that market share as possible. However, it's really identifying who do you target, right? Because there could be 25 different payment methods, but if 24 of them are being used by a demographic that's not even the one that you're targeting, right? You don't have to worry about that. So it's really understanding who you are as a business. What service are you selling? How are people already behaving with the product that you're selling? Like you have, for instance, like subscription-based businesses. Well, cards is still a great way to do that, and process those transactions. But if you go into Europe or in Asia, where it's much more of an account to account type of thing, what is the best solution for that? And are you the type of merchant that can actually drive a consumer to make the decision that you actually want them to make? I think for fashion and retail, that's why I think buy now, pay later did extremely well. The problem there was the fact that, yeah, there was a young hungry demographic. Fast fashion was all the rage, but people were trying on things. You weren't going to the shop. You were ordering 5, 10 pieces of clothing, and then you could return them for free. And I think that's really where buy now, pay later sort of like really was able to capture on, because they're saying, well, let people order as much as possible. And then when they return it for the things that they're holding on, that's what they're actually going to start paying for. So I think it's really about understanding who you are as a company, who you're targeting, and then understanding what they have as their preferences and playing into that, making sure that you get as much of that um, audience to convert as possible, and then slowly but surely add whatever needs to be added so that you can get as close to that 100% of the possibilities that you can provide.
I think it's a really good point around what are the customers you're trying to attract. I'm doing a talk at MRC in Barcelona coming up, so quick plug there if you happen to be there. But the talk is with a company that deals with luxury retail, right? And then they don't want to add buy now, pay later because their customers would find it offensive that you're suggesting they can't pay for it now, right? That's a very different type of audience. But it does, I mean, to continue down the buy now, pay later, it's pretty interesting. Most major companies are trying to stop that, bring in order 10 items and return 9 because it's killing them. And so what does that mean to buy now, pay later? Like if that stops, do people stop using buy now, pay later, or is it just too much of a habit now?
No, I think, look, overall, if you look at the research that's being done, even though I love buy now, pay later, I think it's a great evolution of what we have. It's customer behavior, basically getting its needs met, right? Um, but overall, I don't think that the global volume of that in the short term is going to be more than 5% of global volume that's being processed. I think if we look at it, you see other payment methods like digital wallets and cards still dominate in some fashion or sort of even digital wallets supported by cards are still like one of the number one payment methods in the world. I think what we need to get our head around is that what is the behavior that people are doing? Why are they using buy now, pay later, right? It's like I mentioned with fashion, it was much more of a let me try all of these things out, then I'll send it back, and then I'm paying for it, and then I can either pay it all at once or I'm going to then still do it in installments. So I think it's all about understanding where that is going. And I think buy now, pay later is definitely here to stay, but I just think it's going to be placed at different payment methods throughout, right? You have cards, for instance, in the UK, we already have cards where you can purchase it with your card and later on decide if you want to flex pay, do it in installments. It's like the Brazilian installments, right? Like it's been there for decades and now it's catching on. So I think we'll definitely continue to see that come about. And I think merchants will continue to adapt. I also think buy now, pay later players themselves are already experimenting with different things. Like Klarna has their own card, right? It's basically saying if a merchant doesn't offer Klarna, you can still pay there. We'll deal with everything on our side, because that's basically what it is. It's just a flexible way for people to pay, that was wrapped around in a nice payment method. But now you see it's still adopting and saying, hey, we're not going to be everywhere, but how can we make it much more accessible to everybody else?
So I'm in the US, right? Every morning is a surprise. So I wake up to watch the news. So we got to talk about tariffs. We've got to talk about deglobalization, right? A lot of the evolutions in payment have been around globalization. Have been looking at helping, nations come online that not necessarily card based and bringing that to US retailers, etc. But we're getting the other way right now. So we're becoming less globalized. These tariffs are kicking in. I mean, talk about tariffs and e-commerce and what that's going to do to that. The non-availability of cheap Chinese goods in the US is going to be interesting.
Mm.
But what is this going to do to payments? Is this a good thing or is this a bad thing?
Um, I think I think what's going to happen is that the more we sort of like get what I call sort of like these trade blocks, the more they harden, the more the payment flows will sort of like follow within that, right? So, um, first of all, I think there's going to be a lot more hard currency controls. You know that from like Brazil, Nigeria, you have specific countries who are like really adamant about their own currency and making sure that that's there. I think that needs to all of a sudden now be something that merchants start to address. Hey, you want to operate in those markets? PIX, you want to be in Nigeria. What are the methods that you need to use? And then what's your strategy as sort of like the finance department or as a payments provider in the middle? What are you facilitating? How do you get those currencies exchanged and how do you get them settled? Um, might be an instant for like stable coins and other things to come in, but that's another discussion probably. I think also data localization clauses are going to start coming in, right? So look at India and look at Saudi Arabia, where those national schemes are really pushing Visa and MasterCard a little bit more to the background. Like Saudi Arabia, I've been there or I've worked on Saudi Arabia payments for a long time back in 2018 when we had MADA. And I remember when we were working with a large, we were working with Netflix. I can probably say that we were working with Netflix, and they really wanted to be in the Middle East and wanted to be in that market, but everybody had extremely low authorization rates because everybody was submitting USD transactions on MADA cards and getting hard declines on all of those things. I think we're going to see more of that where those local schemes are going to say, no, if you want to do business in our country, first of all, we need to make sure that you either have an entity set up over here and you can actually do business over here. But if you can, you're also going to have to work in our currency. So it becomes a much more of a, where are you from? What is the entity? And are you submitting that in a specific currency that we want? And then all of a sudden you're going to see much better authorization rates. So I think for merchants, what that means is that we'll see more and more multi-acquiring strategies that they will start to utilize to make sure that all of these different rule changes that are happening, they need to be extremely flexible, but you're going to have people that are you will need to have people that are really going to dive deep into that data because things will not be spelled out. You will have to find what those issues are and really monitor those things as these things are happening so that whenever a new tariff comes in or whenever new data residency mandates lands all of a sudden, you're going to have to deal with that and you're going to have to find solutions. And I think that's where, of course, orchestration and other things can play a big part in it. But you're going to see more and more merchants have to apply to a multi-acquirer, multi-local method type of strategy and even have multiple entities to make sure that they maximize that.
I think like doing whatever people like to kick the big card companies, right? It's a favorite hobby in payments, but the truth is they've done a great job in gluing the world together. So you can take your card and use it pretty much anywhere in the world. But what I'm seeing, and it's from experience of one of my friends traveled to India recently. He got in a taxi and tried to pay and realized that only things they were paying were local payment methods, which were only available to people based in India. So he ended up having to borrow money so, in order to pay for his taxi fee. And it kind of does strike the question of what you got all these local payment methods, whether it's Pix in Brazil, UPI in India, etc., but they're not interconnected in any way at all. And so as a consumer, that's difficult if you're a traveler, but as a retailer, it's even more complicated, right? Because you might have money going into one place that needs to go somewhere else because you're paying for supplies. So I think there's lots of opportunity, I would say, in trying to glue this whole thing together, both at the settlement and acceptance point of view.
Absolutely.
So the thing that keeps me awake at night, one of the things that keeps me awake at night is quantum, actually. I weirdly studied quantum as part of my marine biology degree. I won't explain why, but it's just one of those things. And it seems to be happening. Actually seems to be happening faster than we thought it would happen. And one of the sort of like, with all new technology, everybody goes to the doomsday scenario straight away. AI is going to wipe us out and this, that, and the other. But one of the real threats of quantum is encryption, right? It laughs at encryption openly. Like I think you could crack an RSA algorithm in like 6 seconds or something. What the hell are we going to do? All the payments are basically based on these algorithms, right? That's how security works. So like, any ideas, any thoughts around, is quantum going to eat our lunch and what the hell are we going to do about it?
Oh, it's a challenging topic. Absolutely. I'm looking at it as well. And look, I think if we take one step back, right? Like I think we've seen so many developments lately, especially on just encryption. Vaulting is something that I'm really diving really deep in, especially on network tokens and utilizing that with orchestration. And indeed, right, if quantum comes in and you have quantum computing sort of like coming in and being able to take network tokens or to take whatever that is and sort of like rig it, I think that's going to be the challenge. I think the counter aspect of that is, I think for the first time in probably a good 20, maybe 30 years, payments companies for the first time will be forced to really start looking at what's their cybersecurity strategy, basically, right? What are you actually doing? We still, every single year, we see the leakage of so many different cars, all of these other things. And of course, vaulting and network tokens are great developments within that. But imagine just quantum attacks, just being able to break into your networks overnight and just take all of that and then run with it and extract as much money out of it as possible. So I think for me, I have to dive a little bit deeper into the whole quantum aspect of it and how it will really affect us as an industry. But what I like about things or innovation and development is actually that for every reaction, there's a counter reaction that we basically have to come up with, right? When chargebacks and everything came in the scene, we had to figure out new ways, and that created new innovative companies. Like there was a time that the chargeback were just a nuisance, like you couldn't do anything about it. Nowadays, you have alerts and you have, scoring systems and you have fraud engines and all those other things that are doing a phenomenal job. And that created a sub niche within the industry as well, where a lot of us data geeks sort of like really went into. So I think quantum is just one of those things that we really have to study a lot more of and understand and see how will this affect us, because no doubt I think it will affect everything, and money and finances is probably one of the first things that any scammer or fraudster or somebody utilizing getting their hands on this technology will try to see what they can do with it. But then the reaction then becomes, what are we doing to prepare ourselves for that? How are we making payments much more secure? And what are we doing to have better cyber security strategies in place to actually mitigate as much of that risk as possible?
Yeah, I think it's less likely to be an individual or even a group. It's more likely to be a state, right? There's the price of a quantum machine, but that's his whole own problems going on right now, and we've read around them. So misconceptions in payments. What is the one misconception about payment that winds you up, makes you annoyed, and wish would go away?
I probably have a few, but I think probably the one misconception that I have is that I think we've gone down the spiral of, and I've said it myself, right? And I always talk about the commoditization of payments, right? Like everything is just, it's the same thing. But I think the biggest misconception that I had is that payments is a commodity and it's just something that you do and that's it. But I think whenever I talk to companies, when I talk to merchants, when I'm trying to make them understand why am I so excited about payments? Why does it continue to be a topic that I enjoy talking about and working on? Because I believe that it's really a way for companies to control a lot more of their margins, and they can use it as a growth engine if they truly optimize it. So what I mean by that is, yes, you can accept payments, but if you really understand consumer behavior and what they're doing, it's not just the payment that matters. It's it's from the first start that they're seeing the logo of the Mastercard, Visa, Amex, PayPal, their favorite buy now pay later provider. That can already have a trigger for them. So understanding that payments is, hey, it's where we end up, but oftentimes people are already making subconsciously the decision that, hey, I want to buy something. I might not be able to afford it, or I might not have the flexibility, or I might not have, oh, wait a second. They have that buy now, pay later method. Or wait a second, I have my credit card around here somewhere, right? It's all about that brand recognition. And I think if merchants use it well, they can use that to really grow their business a lot quicker, but they can also control a lot more of their margins. As we've seen, like if you're on a global scale, understanding payments and knowing that it's not the same everywhere around, you can really control your margins across the world. From the US, what are you utilizing? What's your strategy to Europe, to Asia, to Latin? So I think, it's that's really the misconception. And I think that a lot of people, especially on the merchant side, need to get out of their head. It's not all the same. It actually can add a lot of benefit. And it also helps if you understand what you're doing with it.
I think, like, in my years of experience, I've often been on projects where payments is the last thing people think about. Like, they go and build the amazing e-commerce website, and then they get to the end and go, okay, we need to do payments now. And then they're like, oh crap, it doesn't work like And so you end up stuck in a big hole with things not working. And then also people do this, oh, I've implemented payments, I'm done. And that's another misconception that drives me out the wall where you plugged in a PSP 7 years ago and everything's great. And you're like, no, you are leaving money on the table. You are throwing things away. Like it's not turn it on and then leave it. Then
It's that I don't do it anymore, but if somebody's out there, like, an easy way, I don't wanna say an easy way, but a way that it for me was always easy to run. I've done a couple of consultancy companies, and one of the consultant companies that I did, whenever we were really sort of like figuring out how do we make revenue, payments audits for me was the easiest thing, right? Because if I would find a company that was doing $1 billion, where I knew they were focusing on just building a product, going to market, setting and forgetting their payments provider, and I would knock on the door and I would say, "Hey, what who are you using right now? What are you doing?" "Oh yeah, we integrated company X." I won't know specific. We integrated company X. "Oh yeah, okay, cool. So when did you do it?" "Oh, about 7 years ago." "And you've never looked at it?" "Oh, wait a second. I think if I'll do an audit, I'm pretty sure on $1 billion, I said I can find you optimizations either in conversion or in reduction of cost of at least 1%.
at
Right?
least, like,
At
honestly.
least 1%. Saying that $1 billion, and I know I can either make you or I can save you or make you $10 million just like that. Give me all the data. I'll do it. I'll even do it. I'll do it only if I prove it, basically. And let's just say overall, I'm probably betting 100% when it comes to just being able to do more than 1%. I've done 2, 3, 4, 5% in either revenue uplift or just the cost down. And I think that's it's one of those things. But companies keep on doing it, especially now. You see all of these AI companies, they come in, they plug in, who has 3 lines of code, and then can we just implement and basically just go at it, which is great and fantastic that you can do it. But if all of a sudden you're at 800 million users and you're paying, well, they're probably not paying the top price, but overall you tend to pay a lot for it instead of taking 2 steps back and saying, hey, we can actually utilize this for a lot more.
That's a
There's
very
a lot of
quick
savings in it.
very quick way to become a hero at work, especially in this environment, right? Is you actually start giving money back to your business rather than asking for money. Right now, it's a great way to get a promotion you need, right?
Absolutely. Absolutely. Yeah, absolutely.
So let's talk about AI a little bit. Like we look at AI, everyone talks about it. Every conference you go to now, at least half the talk tracks are about AI. When it comes to payments, I mean, we've been using however you want to classify that in AI. Lots of people are misclassifying AI at the moment, but we've been using that for years. Like I've been since the first fraud models built at CyberSource back in like 97, 98. We've been using learning throughout. So I think in fraud, it's well used and it's not branded as AI. Well, what else? Where else is AI going to affect payments right now?
Um, well, I, I always say like there's 3 main ways that I think AI overall can impact the business, right? And I think it's first of all, everybody needs to take all of their preconceived notions and leave them at the door. And just for reference, I've worked within payments and with data for the entirety of my career. But I also went back to university, got a bachelor's degrees and a master's degree in information sciences before we nowadays call it data science. And I restarted my career as a data scientist like over a decade ago at Atchen as their first data scientist. And then I've had every single data role after that, head of data, VP of data science and analytics, and I ran a data science and analytics consultancy company. And through that whole period, I had to beg and please everybody to do something. Let's just put everything in a data warehouse so that we can build amazing things with it. But I always look at it as this is that if you want to utilize AI in a payments company or any other company, the first step you have to look at it is just productivity. I think in the news, the last couple of weeks, we've seen different companies. I think it was Shopify who's like, if you're not using AI, basically, what are you doing here at this company? You need to be AI first. Because first of all, I think it can do great wonders for productivity. If you're writing an email, do you really need to be all fancy about it, spend an hour writing a single email? Or can you just brain dump your thoughts into a chat GBT or something like that and just get the emails out? Maybe send 20, 30 emails in that hour and go about anything else that you actually can be productive and think on a higher level on than the time that you'll be spending about booking the next call or, responding on a basic email. So I think productivity is the number one level. The second level that I'm really thinking about it, and I think a lot of companies, especially in payments, are utilizing it, is we write a lot of code, right? We write code for the front end, the back end, the servers, all of those different things. And the AIs, especially the generative AIs capabilities, are becoming are becoming better and better. I'm not saying go use a fully like a cursor AI, which I love, by the way, but start using Copilot. Start looking at, your codex. If you have multiple developers who are all head down trying to code their next feature, what are you using? How are you improving those techniques? What can you do? Can you train the AI on your own, on the way that you're writing code internally into the company? Or can you do it to do better audits? What can you do within that? So I think doing that can actually make a 1x developer, maybe not in this with 10x developer, but definitely like a 5x developer, right? You want to make sure that they can crank out more code and you can release a lot more features. I think the best payments companies are not the ones who are doing one or two features a year, but who are actually basically releasing every single week or every 2 weeks, every single sprint, they're releasing something, testing out new things. And I think then the third level is really where I say where you want to become this AI driven company. And what I mean with that, um, it's not just about having productivity or writing code, but it's actually saying, hey, AI is utilized from the machine learning, the generative AI. What can we do to actually make the company better? Can we take our customer service functionality and instead of having to go back and forth, shooting tickets back and forth, what can we do? Can we actually create a product to take it to the next level so that we can take a lot more of the weight off of customer service, so that we can hire, people who can actually focus on solving the difficult problems into our companies. So I think once you become a company that can then say, hey, around customer service, around sales, around marketing, around the product, around everything that we do, we can be truly AI driven and not shy away from it. I think that's really where I see where a lot of payments companies can make huge steps. And just to leave you out with the statistics, like I think it was Deloitte who had a report that actually said, hey, out of all of the financial companies, including payments companies, probably 80% of everybody, all the C levels were talking about it, but only 2 or 3% of them were actually implementing it. Meaning that just basic stuff, having ChatGPT, just being able to utilize things. Of course, there are a lot of preconceived notions about it, but I think we need to move past that, or we need to find ways to actually say, okay, how can we utilize it? You don't have to use the proprietary one. You can use an open source one and then use it internally and then build off of that. I think that's where we need to get to.
Yeah, I think we're going to do a future one of these podcasts about agentic AI and how that's going to change everything. Looking forward to that. Well, look, we have to talk about orchestration, right? So it's what we do here at Gravy. It's part of everything. A part we're here. Why is it suddenly having its moment, right? There's been orchestration companies around for a while. There's been sort of new generation, which I'm proudly to say we're part of, but it's suddenly having a moment. Every RFP, every RFI going out there now talks about orchestration. What changed?
I think orchestration is the antidote to fragmentation, right? Um, it takes away or it abstracts basically everything from your acquiring, your APM, your fraud tool, all of those different things. And I like to talk about it as what I call we have the unbundling of financial service, we have the unbundling of payments. And I think what really changed is that we've seen the bigger companies, the Googles, the Facebooks of the world, probably over a decade ago, they were the ones who were already starting to take all of those components and start building it out themselves. And they were the original orchestrators. They were the ones who really were dedicated to optimizing that. Then we've had that whole wave of orchestrators being built, but merchants not being there yet. I think we've now gotten to that point where merchants understand the powers of payments and they're understanding that they're now in charge of rebundling the payment stack into their ideal situation that works specifically for them. And I think that's where orchestration for me really fits in, is that it's a company that's saying, I'm taking control right now. I don't need to own everything, but I want to have the control, and I want to put the components together. I want to put the Lego blocks together to create my ideal payment stack that optimizes and that works for me. And I think that's really what we're seeing right now. And we're also seeing that understanding and that threshold is being lowered. The volumes that you needed to have to even think about orchestration, because the cost added at that point was so significant. Now we have so many different players in the market who all have their unique perspectives on it, but I see that number going down from, I used to remember it used to be in the billions, and then it was in the hundreds of millions, and now I've even seen tens of millions where companies are already thinking about, hey, we need to orchestrate because we're global, right? We're maybe doing 10 million or 20 million, but we're global. We're doing from Australia all the way to the US. And yes, we're doing 3, 4 million in Australia, and we're doing a couple of million in Europe, and we're doing a couple of million in the US. And there's not necessarily one party that can give me everything across the board or can give me what I'm looking for across the board. I think a lot of them are trying to do that, but then sometimes you just need an orchestrator that you say, I want it the way that I want to have it, because I have slightly different model, or they're not willing to take on my merchant category code and work with me on that part. So I think that's really what we're seeing right now.
I mean, from my perspective as well, I think the uncertainty of the market, whether it's tariffs, whether it's recession, whatever, just means merchants need to be able to move quickly right now, because something changes and you've got, so, 18-year-old legacy platform sitting there. You could be dead by the time you fix it, right? You could be game over. And that's what happened in the last sort of recession, where some companies sat there and they realized they couldn't move quick enough and they just weren't going to make it. And so I think like having a flexible platform right now that allows you to move quickly with changes is almost a necessity. And actually, you're at risk if you don't. Because I mean, I don't know what's going to happen tomorrow, frankly. Like, I wake up, watch the news, and I'm like, oh, here we go. But I think if you can't move and you can't change and you can't be flexible, you're going to end up in trouble. So I think that's something that, I like to talk about. I don't like to talk about, but I do talk about because I think it's necessary. So last one, if you had a magic wand, you could wave it and you could fix anything in payments around the world. What would you fix?
Mm, I think that's a challenge. If I could fix anything, um, I'm gonna probably bring it back to my data roots. Then I would probably say, if I could create a standard, like a universal open standard that every scheme, issuer, wallet, and PSP must honor, right? So that if we want to put all of, like, we have all these proprietary formats and everything, and that everybody has, but at the end of the day, it only benefits the companies that have that proprietary format. But as we're sort of like working in this orchestration, data sharing, where we want to benchmark, we want to do all those other things. If we finally let merchants sort of like treat all of their payment data as an asset and not as a liability, or basically sort of like shackled to the one who issued the original pen, or who processed the transaction. Now I want to see openness. I want to see a standard, so that if I'm working with 5 different places because I choose to, I want to just be able to dump everything in there, run a dashboard, run a benchmark analysis, and get to the result that I want to get to, or make the decisions that I want to make. I think that's that for me. That would be an ideal dream, because I've seen so many. Like, I've had this conversation over the last couple of weeks as well, where people are asking me like, "Hey, uh, why do the standards differ so much?" I think because everybody has their own interpretation of that, and I think it would be great, even if it's just starting with the card schemes, where companies are not going out and making their own, they're turning like a decline reason into like some magic mumbo jumbo, basically. But I just want to see, like, I love the raw acquirer response. Like, I need to have like the log data for me to then say, okay, how do I reconstruct it? But I wish that all the providers would just give me that. And then, nowadays, again, with AI and everything that we have, we can probably come up with a nice format that we can become like an open standard for all of us, and then utilize it so that we can all improve, and that we can all share, and that we can all become better. Because at the end of the day, only when a transaction succeeds do we all succeed. The issuer succeeds, the acquirer succeeds, the merchant succeeds, the customer succeeds, right? We all win in that platform. orchestrated succeeds. Like everybody succeeds when that transaction goes through. So, but also if it doesn't go through, everybody wins as well, because the last thing that you want to have is that a transaction that shouldn't have been made to go through, right? So if we have those standards and if we can utilize them, I think that would be a great thing. That's what I would use my magic wand doing that for.
So I really appreciate your time today, and thank you.